Oh wow, my music just stopped. Oh, what happened there? All right. Oh, that's not cool. How's it going, everybody? Hopefully my stream is still live. Good morning. Let's see here. Is stream still live? I got some kind of issue here. All right, my computer's crashing on me. This is cool. Not really. What's up with this? Every time I go live, it's been acting up lately. Sup? Good morning from Australia. Wow. Brooklyn Moto. Bring Lemmy God. Where's the Lemmy God at this morning here? Yeah. Alright, let's try this. I think it has something to do with the fact that when I stream... Well, good morning, everybody. Let's talk about... got the Lemmy God here. Lemmy told us all he's setting a floor under the market here. You know, his mega account. He's got a floor under the market right around 46.2, so he doesn't have to worry about it going below that. Morning, Jonathan. Good evening from South Africa. Wow, cool. All right, so everybody wants to know, is the bull market over? Are we in a bear market? We're going to talk about that today. My thoughts on that. You guys are not going to like my answer, but it's not that we've started the bear market, and it's not that we haven't started the bear market. It's that there is no bear market, but we'll get into that. All right, my chart's a little bit busy here today, but no, my charts are very functional, right? And so we're going to talk about some of these functional kind of levels I put on this chart and really what I'm looking for to happen. Just know when we get started here, as usual, I'm not a licensed financial advisor. Anything that you hear here today is just my opinion about what I see in the markets. If you were to take trades blindly based on anything that you hear here today, you're going to end up losing all your money and living in a van by the river with Doge, who now, you know, Doge, his currency is now accepted for payment by Tesla. Elon announced last night, not Tesla cars, but merchandise. You can buy some merch. Buy your Tesla merch with the Doge. All right, so I didn't have a trade on Doge. Let's take a look at what Doge is doing here. Obviously, we got the FOMC. That's the big thing today, right? So we're going to see what that brings today. The Dogecoin made a little move, and it's fading pretty fast here. So we'll talk about FOMC coming up. My thoughts about, you know, everybody's looking for a hawkish Fed today and this week. Will they be accommodative more so than the market's expecting? What's the market currently pricing in? It looks to me, if I had to guess, the market's just doing a little bit of risk off here. Now, in the equities markets, there's probably some talking heads somewhere. Oh, yeah, hold on, I gotta look at this. What's the real comment? It's cheap, winking face with tongue. I love it when you guys put the emojis in here because I can just, like, pull up the comment with the actual emoji. All right, smash the like button. Thank you, appreciate that. To me, the equities markets, now there's probably some talking heads out there on CNBC somewhere saying the markets are crashing. We're down 2.1%. Oh my goodness. I would hope that even they are not saying the markets are crashing. Look, the markets, S&P is a few percentage points off of the all-time high coming into the FOMC meeting. So while the markets may be forward pricing in some uncertainty, it's really just people taking a little bit of risk off here ahead of that event in case the Fed is more hawkish than the market anticipates. And what that means is that the Fed is indicating that they're going to be doing things to actively try to rein in a few problems that they might have. So if the economy is doing okay, what happens is the Fed actually, in theory, is supposed to take their foot off the gas pedal, right, and let the economy do its thing and start to rein in some of the monetary policies they've been blasting money out into the market. That's why the market has been straight up to the right, really, honestly. This is just infusion of liquidity from the Fed, right? That's what causes this straight up to the right action. My assessment is because of how fast these sell-offs, this was an attempt, let me show you this here. I'm going to talk about the broad markets for a minute because I think it's really important to understand what's going on with the broad markets, to understand what's going on with crypto. So I was watching this potential ascending wedge formation, and it broke down, and we got confirmation of the downside, but it got caught right through here, this you see this little swing high right here kind of gave us some support right there. That swing high from June gave us some support on that sell-off, and we got a nice bounce out of there. Well, again, this is QE continues. You know, asset purchases continue, and so money keeps being pumped into the markets. Well, and liquidity keeps getting pumped in the markets, and the markets trade around liquidity. So when I saw this event, what this told me was that the more likely scenario than a breakdown out of this channel and out of this ascending wedge structure, and all that really did, right, is that ascending wedge kind of sent us back to the midpoint of the channel here that I've got. And I draw my channels manually. Again, my charts are very functional. I take my lines and draw them individually, but and so what I think is the more likely scenario, because of how the market's being caught here, I think the more likely scenario is that we actually break to the upside of this channel. You see how many times we've tested the upside of the channel? And really, we wrote it all through here, tested it here again. And it's very quick test of the downside and a bounce. I actually think we get a break to the upside of this channel. I think it's the more likely scenario, and have a little bit of a mini blow off and then back down to the top side of this channel and then maybe consolidate. That's, I think, more the conclusion of where the market's headed. But, you know, I could be wrong. What would be really healthy for the market, rather than that blow off top scenario where you know, smaller investors probably get hurt the most because they're just not aware of you know, losing momentum up here when it does start to lose momentum, is I would hope that the markets go sideways, right, and get us to the bottom of this trend line. Maybe even, like, I would love to see us come back down to this and do like a, you know, pseudo double triple bottom over here, but I don't think that's likely. We'll see. We'll see what the Fed meeting brings today. This point right here is a 10% sell-off. We haven't had a 10% sell-off in, I don't know, a long time, since the you know, COVID correction over here. So I think a 10% correction is probably warranted and healthy, but we'll see. Now, if the markets do roll over and give us a 10% correction, what does that mean for crypto? I think initially, obviously, there were claims in the past. People said that Bitcoin was going to detach. This is a very simple perpetual futures chart on Bitcoin. That Bitcoin would detach from equities, but if I compare the S&P 500, SPX, it's all crypto, right? Let's see here. Let's move this to a new visibility. Sorry, I need to move this to a new on the left. Move to pin to new left scale. All right. So we can see a loose correlation to equities here, and this is a shorter term perpetual futures chart, so I don't have a longer chart here. But you see the big sell-off over here. You know, obviously the liquidity crisis, they both traded together. And then we had, you know, Bitcoin made a really strong move, and we've had a few small corrections in equities, and about the same time Bitcoin made a fairly big correction. This correction here and this correction here. So most likely that means that we would have a little bit of a correction in Bitcoin if the equities were to roll over. Now, here's what I'm ultimately watching. We put in this structure, so obviously everybody knows by now this is like, this was clearly a Wyckoff pattern. This was a Wyckoff accumulation pattern. This was a somewhat of a Wyckoff pattern. This isn't a true distribution pattern, but it was a kind of a reaccumulation. But really this was the last, this was a back test, they call it, on coming out of this pattern, right? So the back test. And this was probably a 1, 2, 3. This is a very weird, if it was a Wyckoff distribution pattern, this price action came in before the fall much lower than normal. Normally you'd have some price action here and then a rollover. So we've seen kind of this, but this could be, you know, well, what do they call it? Periodic distribution. But nonetheless, we've seen this clear manipulation in the market, right? That's my point. So what I don't know is I don't know what that manipulation means moving forward, but I keep looking at myself, this price action over here, where we had this kind of driving a couple of peaks, a false, you know, break to the upside, and then a big sell-off, and basically a sell-off and then a second sell-off, and then we end up finding support right around the swing highs of the prior moves, right? So let's draw this line through here. Now, as you all know, I don't know if you do know, if you're new here, welcome. But I trade a lot around the moving averages. Now, the 200-day moving average is my last line of defense here before I get kind of more or less completely neutral. So I'm waiting to see if that holds, if we get a bounce off of that. So I'm currently in positions, in trades, trying to play the monthly support, which comes in right around that level. Let me show you that monthly support. Okay, so I've got all these yellow lines to get rid of here. All right, so the monthly support, so this is August and September open, and then the October monthly right here. So we've got the October open price, which is, let's get rid of percentage here, 43K. And then we've got the September open, August close price, September open price of 47, roughly 47.2, 47.3, somewhere in that area, right? So what I'm playing is you see here the 46,000, is that right? 145, yeah. The 200-day SMA is right around 46,000, 46.2. And then you've got this, so you've got a support zone all through here. That's currently what I'm playing, is this kind of support zone that we've formed right here. Right all through here. Okay? So I'm buying into the support zone, and I'm looking to, my exit. Now, I did lighten up. I'll tell you this. I put on Discord last night, if you're in our Discord with us. I said I lightened up on some positions last night because we were starting to roll over here. So I did reduce my position size, but the reason I did it is more so that I can move my stop losses lower for today's FOMC meeting, and then had the ability to buy in case we get some real volatility. I went ahead and put some orders in at 43.8, right at the bottom of this range. So my goal right now is to buy into this range, and then we'll exit if we get below this low wick over here. Now I do have some more finely tuned orders, but again, I started exiting those. So if you were following me on Discord, I've lightened up my positions specifically to get my position sizes back down to where I can put my stop loss below this low wick right here. And that way the FOMC volatility today, I can take advantage of it as opposed to being stopped out on it, right? So that's my current strategy. But this is the area, the zone that I'm looking for. Now, if we lose this zone, I'm not going to say the bear market is on, because I don't think there's going to be a traditional bear market. But we definitely need to really talk about how we're going to trade this market moving forward. We can't really depend on a sustained bear market and a sustained bull market, right? It's probably going to be, looking at the equities markets, what we're just looking at, I imagine the charts are going to start to look a lot more like that in crypto as crypto becomes more of a mature marketplace. Ultimately, for me, the other thing to keep in mind on with Bitcoin would be in a bad spot if we lost this bottom trend line right here, and we resume down. Now, there's a confluence of factors I'd be looking at here. What I want to see still is I want to see on-chain and some fundamentals do certain things, right? But what I'm becoming more and more aware of is potential manipulation of even like on-chain and some other fundamentals markets. Now, the futures markets and the options markets, there's not a lot that can be manipulated. Well, I guess there is, but the larger metrics around them, open interest, funding rates, this type of things, those are pretty well-known variables. So we can continue to watch those for short-term signals. That's not going to give us a lot of long-term signals other than maybe open interest drying up. So, from a price action analysis standpoint, basically, I'm looking at if we lose this bottom monthly support right here at 43.8 roughly, if we don't get a quick bounce off of this trend line and back into that support zone, then we're looking for a lot of sideways action. We've already lost. Now, here's where I'm struggling a little bit myself. I'll just admit it, right? The moving averages, this was my chance. My rules, I said I was going to exit on start to trim spot on a loss of the 50-day moving average. Well, it happened pretty fast. That was my opportunity right there, and I didn't execute because on-chain a few other things weren't really lining up for me. And so this whole area right through here is where I should have been more aggressive in trimming. Now, personally, I've been out of leverage, just so you know, right? I've been out of leverage since we lost this. So I said when we broke the prior all-time high right here, if we come back below it, so I put a stop loss just right below it, 66.8 or something like that. If we lose this all-time high, I'm going to be out of leverage. So I've been out of leverage other than scalps for trying to play these bounces ever since then. But I was supposed to trim spot right here, actually tradable spot, and I didn't execute. I didn't follow through with that because a few things weren't lining up for me. And the retest was so fast. I didn't see us have a good retest. And then, so the other level I normally would have, obviously trimmed some spot at was a retest and confirmation of this area, the 120-day moving average. Well, we didn't get a retest pretty much at all, except for this little wick that didn't even quite get there. And now at that level, I'm going over all this because I want to explain what I think is the most likely scenario, and this is going to give me my answers as to the question that we're asking: has the bear market begun, or will there be a traditional bear market? That level right there, that's a weekly level. That's the weekly close, the August close and September open. The weekly high for not the monthly close, but the weekly high for August and into September, right? So that weekly level right there, which is right below the 120-day SMA, it got tested very briefly here, and then we were rejected at it. So that's not really great news. I still expect the market to make a bounce up there one more time. I expect this to be range bound. You see this zone that we've been trading lately, and Michael and I talked about this. Michael brought it up actually, that we've had not that much price action kind of in this whole area. So he was thinking that we could go sideways right in this area for a while, right before we break to the upside. My expectation is we need to test that level one more time as resistance, 52,000 roughly. And then if we roll over there, that'll tell me a lot about the state of the market. As of right now, what this could be is it could be the last reaccumulation. So we saw this, right? This big rolling pattern here. What we're still watching for is, do we have another rolling top with an accumulation pattern? Rolling top with an accumulation right here, right? So this kind of put in a floor right through here, and then we had a strong bounce out of there. Is this going to put in a floor in this zone right here and then make a strong bounce out of here? That is yet to be seen. But I do believe that if you are bullish long-term on the fundamentals, the moving averages are not really where I want them to be, so I'm not going to be overly aggressive. But this is my last stab at buying in this zone for a bounce. So this zone right here needs to hold. If we lose this zone, that would basically confirm resistance at the 200 even, right? We would lose the 200-day, and these moving averages obviously would start to precipitously come down. We'll eventually retest them, but what's going to happen is these are going to continue to slide down, and then the retest will happen, down here somewhere. All right, so those are my thoughts on that. So crypto is tough. Like using my strategy again, this should have been my exit, and I didn't execute, so it's an error on my part. But it sliced through so many support levels so fast, and it hasn't, we quickly retested them. That was an opportunity there to maybe be more aggressive about exiting some positions or getting some cash on the sidelines. The one thing I think is very important for us all to consider is that, again, now we could be again in this accumulation pattern here, and we could just blast after FOMC today if the markets kind of like the news. If the Fed is more accommodative than people expect, we could certainly bounce strongly out of this support zone and resume up, right? Like this price action that we had over here in September and early October. That's a potential. So we'll watch closely for that. A lot of noise about this Three Peaks domed house stuff going on. I think people are stretching a little bit with the Three Peaks domed house thing because the floor level is kind of all over the place right here. So I'm not 100% sure. There are people that think that this was the domed house and this was the floor. I don't think so because the floor should be right through here somewhere. But we'll just kind of see, if we get a bounce out of here. That's another pattern that I guess could be in play. I've never actually experienced that in trading. I've never experienced that real pattern playing out on anything that I've been trading. Now, I'm sure maybe it's played out on lower time frames or smaller samples, but not on this long, year plus time frame have I seen that play out before. All right. Is FOMC tomorrow? I thought it was today. Let's take a look at that. Is today the 14th FOMC meeting? Did they release the notes today? I got 2-day meeting the 14th and 15th. Press conference 4:15. So here's the calendar. Wednesday. So the 14th, that's today. Commercial paper, selected interest rates. Okay, the meeting is tomorrow. It's a 2-day meeting, the 14th and 15th. So the actual meeting is tomorrow. We get commercial paper and interest rates today. Updates. Okay, that's not anything big deal. All right, so it is tomorrow. Okay. Good to know. So we got another day for accumulation before we have a decision. All right, let's see here. Growth stocks being wrecked today. What we got here? I'm just going to look at the QQQs. I mean, yeah, it gapped down. I don't know about wrecked, but it definitely put in a gap here. All right, let's take a look at, okay, so we had comments here. So we got growth stocks being wrecked. FOMC is tomorrow. I'm sorry, thank you. What about the lick trade, the advice you gave your brother? I bought it too, got wrecked. Oh yeah, sorry about that. So Litecoin trade. So I told him to sell. So I don't know if y'all were with me. I said, you know, I sold pretty much 100% of my Litecoin at 250 when it rolled over here. So we sold at 232, and then I forgot these levels I had here. And I told him to sell on the way up, on the way down here. Now, I don't know if he got all of it sold because he actually had some of it parked earning interest. And so he's still holding, I think, some of it. But we bought at 180. All right, so this is where I was buying. And the levels that you should have had out over here are the stop loss. This wick low right here below this 186 support, that was the stop loss for us at 180. All right, so I got out at 180. And so my last scalp, and then yeah, so our last entries were trying to buy into this area of support, and then a little bit of resumption over here. I had stops here and there for those entries. So the Litecoin trade is pretty much over because Bitcoin has already rolled over, and this was the pop that we got, and I was looking for a second one. We still might get a second one. I wouldn't let go of. So right now we're in a monthly support, and I bought again, right? So I bought twice now coming into this monthly support. I bought at 144 and I sold at 167, which was this resistance here. So the support we were buying into before, the 170, 167 support, is where I sold. So I bought the 144 monthly. Let me show you this chart real fast. But yeah, on the Litecoin trade. And so this is the thing about, like, you know, everybody has to, I may say this is a good idea, and I'm actively managing it, right? And like, I'll tell my brother, hey, we need to sell this here. Like on this pop, we sold. So if we're getting paper cuts on the way down because we're trying to buy on the way down, that's part of the game, right? So made really good gains here. You're giving some back, trying to buy into support on the way back down. Overall, I have this longer term uptrend you see here, this touch here. Right, so as long as we're above that, I'll still continue to take stabs at long entries. But this monthly level right here, you see the June close, and then basically the entire month of July, we wicked down, but we put in this kind of this, not really a hammer candle, but this doji here, and then it found support there and went back up. So this level right here, 144, there's a lot of support for Litecoin at this level. Now, obviously, we had these big wick downs to 102, but this was in the middle of Bitcoin selling off, like, you know, pretty furiously down to the high 20s. But it found really good support through here. So that's where I've been buying, right? So same exact support level, and then we've got resistance overhead roughly here at 153. That resistance has been kind of, you know, crossed multiple times. That is not so much of a resistance anymore. I'm more watching these weekly levels, 150, 186. So we go back down to the weekly levels and see where I'm getting these from. This is the weekly low over here. And so this is still providing support for this week, right? That's the 150 level. And then we have some kind of confluence of a bunch of closes through here. This one's less impactful now because we've taken that out. It's probably going to be more 159. But nonetheless, as long as we kind of keep this longer term uptrend, I'm still buying into support here. And the reason is, if we look at the other part of this chart, you see that Litecoin is coming into support versus Bitcoin. So this is a weekly. Let me go to a daily here. So you see here, this was the 2017 all-time low weekly close. Let me go back to that. Hold on. Right there. So we've had several bounces off that level. So it's more likely at this point to lose that level and continue down. but you know that's providing a lot of support. So Litecoin could still get a pretty big bounce and bounce maybe the top of this channel even, right? So we've played this little bounce here to this midpoint of the channel. This is Litecoin versus Bitcoin. And my trading style, the way that I trade is that I try to buy support, right? And then this isn't a downtrend, so I'm not trading specifically this chart. I would be shorting this chart if I was just trading this chart. I'm actually trading this chart, which is in an uptrend, because it's tracking Bitcoin, obviously. But what I'm looking at is the potential of Litecoin to bounce versus Bitcoin as well. So on my trades, I've been doing the majority of it's Bitcoin, but I'm taking a smaller risk percentage on Litecoin as an ancillary play, because if this were to break out versus Bitcoin, that would be a nice accelerant. And I'll know quickly where to trim my... So if Bitcoin and Litecoin both maybe go up, 10%, right? If Litecoin goes up 8% and Bitcoin goes up 12%, well, Litecoin is going to start to fall out of this support zone right here, this area that we have. And if that were to start to happen and I were to see that Litecoin was starting to close down, I would quit taking trades on Litecoin because it's now losing ground versus Bitcoin. But as of right now, I'm keeping a portion of those long trades I'm taking in Litecoin for the potential that Litecoin breaks out versus Bitcoin and moves bigger to the upside when they both find the bottom and resume out. So, long-winded way of saying, right now we're coming into support. So, if you took my advice to play Litecoin, the play is to constantly watch. And so when we lost this 186 weekly level, this level we've been watching for a long time here, the play is to buy into this next support zone, right? So if you're holding Litecoin, so a few actionable areas at this point, and I don't know where you bought and what your levels are, but at some point, if you bought up here, you should have been out a long time ago, I would say. But the kind of my line of last resort, see this trend line right here is coming through? 122 would be my line of last resort. I would just quit basically trying to buy Litecoin. Pretty much, if it gets below 144, I'm going to quit trying to buy it whenever I get stopped out, which I've got my stops at 135 or something down here. I don't know exactly why I chose that level. I have to go look at the chart closely. Probably this wick low right here. I wanted to get a little bit below that, so I'm 135, a bit below that wick low for my stops. Right at that support trend line, which is probably not the best place to be putting a stop. But it's 135 right below that trend line. So, yeah, I would say that this is a support zone. And now that I'm looking at this, I should probably readjust my position size and stop loss to take advantage of being able to buy coming to this whole zone here on the FOMC meeting. But we're definitely in danger of turning over. But at this point, here's where, in trading, it's a numbers game. At this point, the charts are still technically in an uptrend. Now, Litecoin has these ridiculous pops and then a big sell-off. So it's hard to, it's hard to catch all of these. But at this point, you're buying into support. There's multiple levels of support coming in through here. And I think 122 is a swing high of some type or a monthly support from over here. The other thing, 147 is this swing high over here. Let me just draw this up. Let's just take this swing high. So this is maybe the more actionable area. So this swing high at 147. That's probably why I had that one. This chart probably hadn't been updated. That's why I have 135 there. So I've got this support zone that I'm buying into. 147, 144 monthly support, 147 swing high, and then the trend line here. You lose all of this level, then you need to get out of Litecoin, right? But this is, to me, a decent stab at buying into support in an uptrend. So this is technically still an uptrend. I mean, it was, at the beginning of 2020, it was down at $40. So we are still in an uptrend. All right. Man, I bought when you said that thing, your brother, 200 US, I got wrecked. Well, I'm sorry about that. See, this is what's tough about doing these live streams and stuff, because are you on Discord with us, Taz? Because if you're not on Discord, that's where I'm posting. I do these live videos every once in a while, and I know last time I said, so, if you're looking for something, try to play Litecoin, because if Bitcoin were to roll over here, what I was expecting was potential of Litecoin to make a new high off of if Bitcoin would have done more or less what it did over here, right, and put in a little bit of a lower high. Oh, that's interesting. I didn't even grab that. But if it were to do that, Litecoin could have made a really big move right there. But I'm really active about putting like what I'm actually doing, the levels I'm watching, buying into, where my stop losses are, everything on Discord. So, if you're following me here on this live stream, I would say if I say something like, play the Litecoin trade, if you don't know exactly what that means, if you don't have your own chart levels, your own conviction, your own system, it's an idea to look at, okay, if, I don't mean, I'm sorry about, people getting wrecked here. This is what I was looking for, right? I said this is what I was saying last time whenever I said that, right? I was looking for if Bitcoin bounced and rolled, you see this peak that we put in? There's a good chance that we would have another kind of peak put in here by Litecoin, right? But instead, Bitcoin rolled over more precipitously than we kind of anticipated. It got under the support real fast and just rolled over. Well, when Bitcoin did this, we had to do the same thing. We had to take action and get out of Litecoin, right? So over here, it never made this move. Now, it still could. If you look at the longer chart, you'll see that Litecoin has this panache for making a big move versus Bitcoin and then coming back more precipitously and then making another big move. Odds are Litecoin's getting queued up for another big pop, and so maybe that's your opportunity to exit. Again, the areas to watch on Litecoin are those levels I talked about. We're into a confluence of support here. So if this support zone holds, and I'm looking at this going, I wonder if I want to just slightly notch down my stop loss. Just no, 135 is good. You want to get below that wick low right there. That's pretty much it. If it gets below that wick low, price gets below that wick low, probably in a bad spot. All right. But this confluence of support right here is what we want to be buying into, right? And we bought this, faded that move over the weekend to 167, I think. Or was it this move? I don't know, whatever. I faded at 167. I got out at 167, and I bought back down here. That's all I know. All right. So that's what I would say to that on the Litecoin thing. Hey, what are your thoughts on Eagle? Let's talk about that for a second. Okay. Let's see here. FOMC, NVIDIA for real. First time in a long time. Those are risk off, kind of like BTC. Yeah, so risk off is starting to... Tesla needs a gap close. It was said by someone that Q4 break all correlations, just not which way, winky face. Yeah, no, it's not breaking all correlations, that's for sure. What are your thoughts about Eagle? Let's talk about that. On Discord, again, I made the comment that I thought Eagle probably has seen the top, the 550 top would be the top for a while, quote unquote. Now, by a while, I mean, sans an alt season 2, unless we get an alt season 2, I don't see on the ride listing or anything else, Elrond taking back this 550 peak level for a matter of months, maybe a year or two, right? Now, if Bitcoin wants to go ahead and break out of here and head to, anywhere from 80 to 120K, somewhere higher than we expect, that would mean that this quote-unquote cycle is just very different than we all expected. Probably going to get alt season 2, and absolutely at that point, Elrond would probably blow the top off of this. But sans that, without that kind of dose of hopium, I do consider the Maiar launch to have been a botched launch. Everybody give me a hard time about that. But it was. I'm sorry if you don't like it, but it was a botched launch. So what happened with Elrond's launch of Maiar? So the initial launch went fine. People were farming. I was farming in there, just like everybody else. It's high yield farming. It was doing good. But the biggest problem I have is not the downtime. Because when you launch a new product like that, there are bugs. You have to have a little bit of downtime. Okay, the downtime was not a good look, and that probably brought more attention to the DEX, and negative attention to it. But ultimately, that's not a deal breaker. The deal breaker for me was when they went into maintenance, and on coming out of it, all of a sudden, all the APRs were drastically different. Now, if you recall, if you're on Twitter with us, people spent months on Twitter and doing videos about it, talking about these different strategies, the Denver strategy, I forget all the strategies there were. We'll just talk about Denver for a second. Okay, so it was this Denver strategy thing. All right, so the idea was, on launch, whatever e-gold you had that you're going to put into the launch, you were instantly going to convert 50% of that to the MEX token, right? Why is this being stupid on me? So we're going to instantly convert 50% of our tokens to the MEX token. And then start farming the eGold MEX liquidity farm, right? Liquidity pool. And then that would throw off a bunch of MEX, locked MEX. And so one of the strategies was, okay, so take 66% of your payout as regular MEX tokens, and then use those to buy more eGold tokens, convert MEX back for eGold, and then keep your pool in balance or whatever, right? And that way you could continue to pair the MEX token with the sell the MEX tokens for eGold tokens, and pair those eGold tokens with the LK MEX, the 33% of the payout you're getting LK MEX. That was a Denver strategy, roughly. And then there was this like Megalodon, the eGold Mega Whale guy on Twitter put out this, and that's what I ended up doing was this boost strategy where we basically went. We didn't go the route of taking any MEX tokens at first. We were just doing all LK MEX farming until we reached equilibrium, until we got basically all of our eGold back, and it was just eGold LK MEX that we were farming. And then we were going to do the Denver strategy and take 66% as MEX to continue to convert that and continue to build that pool. All right. So anyway, point is, people spent months and months and months figuring all that out, testing it, going on to the launch, and then we go into maintenance, and we come out of that, and all the APRs are wildly different. And I've asked around, nobody that I know, who these supposedly key influencers of the platform and everything else, nobody that I knew that the APRs are going to be changing at all coming out of that maintenance. But they did. They changed drastically. And it killed the whole Denver strategy. The thing that people spent months planning for and preparing for completely nuked all that. Now, ultimately, for those of us who were just there to farm some free LK MEX tokens that we were going to hold and I'm going to keep my funds locked up. I had already committed to locking up all the money I put in there for a couple of years, right? I don't really care too terribly much about the short term. But when you came out of it, and it was a totally different APR system, nuked all of those strategies and everything else people had planned for. People put a certain amount of equity into the exchange with the intention that they were going to be able to farm it and eventually get their original investment back out, right, or whatever their plan was, right, and get some sort of payout and have that money, payout for whatever reason. Well, the developer, they went and changed the APR system so that it really highly rewarded people doing long-term MEX lockup and not people that were just selling their MEX for eGold and farming, and taking money back out of the exchange. Well, I would have been okay with it if there was like a 72-hour or 48-hour notice, a big banner in the exchange itself that said, hey, because we're having these issues with whatever, in 48 hours or in 72 hours, we're going to go down for maintenance and we're going to change the APRs, and here's the new APRs. Go check this Twitter, this webpage, or whatever, right? Here's the new APR schedule. You've got 72 hours to adjust. That would have been okay with me. I would have much more preferred even a community vote. This is supposed to be a decentralized exchange. I would have preferred them to even have a vote in there. Should we change the APR? Here's community vote based on how much you have invested in this ecosystem now. Votes are doled out based on your percentage of allocation to pools or whatever, like liquidity pools or whatever the hell they want to do. MEX tokens, how much MEX tokens you hold. I don't care how they had done it. I would have preferred them to have a vote that says, okay, here's the problems we're seeing. Here's the proposed changes we're proposing. We'll do these changes in 72 hours if we get 51% or greater vote. That would have been the absolute preferred way. But no, what happened was we went into maintenance and came out with a completely different APR schedule than we went in with. That is a big, big, big red flag to me. It's a red flag that there were people that were much more incentivized on making sure the numbers kept going up than making sure that the system was functional and working. And the focus of developers and a core team like that that's launching a new product should be entirely on building good code, releasing good products, and incentivizing people to use that platform in the future. And the number go up and the growth of the value of their tokens should coincide not with getting people Ponzi style to lock in a bunch of equity into this thing. No, it should come from real world usage, right? And that should drive the value over time. And short term price be damned. Just focus on the long term and get real adoption. So that's why I say it was a botched launch. And I don't I don't really care if you don't agree with me because it was. Now, that said, I'm not taking... I already committed the funds I had committed to it, so they're going to stay locked up in there. If we get a big move in Elrond to, I don't know, $1,000 or something, I'll be selling my Elrond, 50% of it for USD, and I'll be parking my Elrond USD in that liquidity pool to keep farming more mix, probably, right? If this happens in the near short term. But I'm not going to put any more into it myself because as of those red flags. I'm not comfortable putting more into this when I saw clear signs that the focus is on just making products that make number go up, which is a big red flag to me. That means that in the bear market, I don't, if that's their focus, they're not going to get real adoption because that's not their focus is not real adoption. Their focus is on locking in value and making number go up, and that concerns me. So, all right, I see comments. I probably made a bunch of people all angry. Any thoughts on Ride? I'll farm some of it. I'm not super excited about the Ride token. Like, I don't like a lot of the metaverse stuff. I get like gaming tokens. I get metaverse, like the metaverse. I was in the metaverse for years, right? I was a big World of Warcraft player from the launch 2003 to probably 2013, right? I played that game like crazy. I lived in the equivalent of the metaverse in that game, right? So I get it, but like a hologram, like using a VR headset in a car, it may become a bigger thing than I think it's going to be, and that's cool because maybe it has applications outside of that. Maybe you give people VR headsets on airplanes or something, right? And for flights, and it's like this interesting. So you turn turbulence from this scary, thing to like something kind of interesting in the game or something, whatever, right? So that's kind of like I'm okay with it. I'm going to farm some of it just as a moonshot, but I'm probably not going to... I might buy a little bit of it just to help the farm, to get going on the farm and to help the ecosystem. As just being a member of the ecosystem now, right? And one of the reasons I'm vocal about my criticism of it is because anything that I'm invested in, that I want to see do well, I'll also be critical of because I think it's important that we maintain that. We can't just put rose-colored glasses on anything that we invest in. The developers... and the community need to know what's good and what's bad. This is the way it works. So, Denver got destroyed. So, the Ride token, I'm not super terribly excited about it. It's good that something's being launched on the platform. It's good for it in general. It'll help them work out some more bugs too with a coin that's being externally listed, that type of thing for a different project that's not in the core ecosystem. It'll help value locked in there and everything too. So it's good for the ecosystem. And I'll farm some of it as a moonshot, but I'm not going to go crazy. All right, DXY setting up for a bull flag. What would happen if interest rates? This is Bitcoin. So. The other thing too is I was going to say the Wyckoff patterns. Bree on Discord or Telegram group, called out this could very well be a Wyckoff accumulation pattern. This could have been an early spring. If this is a full Wyckoff accumulation, I would expect this to be the ST and Phase B, with the spring down here over here ahead somewhere. But we'll just see. We'll see what this is. Now remember over here. I keep looking at this pattern and going, okay, this is, I don't trade fractals, right? But I will look at them. I'll go, okay, this is interesting. Let's look at this. So this is interesting. Let's look at this. Right? So I'm just going to move it up here. You get the same feel to it, right? So sell off, little bounce, little initial bounce, kind of a fake run up bounce, and then a sell off back to support, a little bit of a pop, and then a bigger sell off. This one went below support, but really ultimately this wick right here. So all this down here is really just this was OI being flushed, open interest being completely flushed out, right? So this was an open interest flush really. So that I'm going to discount that to some degree. This is really this little second wick right here that we had on the next 4 hour is really kind of the bottom. So you see this general pattern here. You put in these lows over here. And so for the most part on a closing price, we stayed above it. And so I was talking about this yesterday on the, I think it was on our Discord group again. I was posting, I was really watching this 4-hour level. Make sure that we kept closing 4 hours above this. So if you think about it on a closing basis, on a 4-hour closing basis, this pattern looks a lot like this pattern. If I were to, draw this on a 4-hour closing basis, right? So this 4-hour close is the lowest 4-hour close right here, right? So this initial sell-off, boom, that 4-hour close. I'm just going to put numbers on this. 1, that 4-hour close. 2, that 4-hour close. And then this was the 3, kind of the high. 3 high, 4 and 5, 4 and 5 more or less, and then you get a 6 on those closes, 7. So this was 7 right here. So do we get another, close down here somewhere, maybe where it closes a 4-hour down here? I don't know. We'll see. And then maybe we bounce out of here, right? So if this fractal were to play out, you kind of see the symmetry here, though. The wicks, again, I largely discount wicks. I look at more closing price than I do wicks a lot of times when I'm doing, like, especially horizontal price analysis. Now, I have this wick low as just like this is a good place. If we get below that wick low, because this was an OI flush, right? The market really wasn't ever trading here. So this was just purely people being, forced out of liquidation. The market really traded. This is the zone, right? Really, the bottom we traded in, and then we traded in that same zone all through over here, this level. So we've got that symmetry that could be going on here. I don't know why I started talking about this. I have no idea. I thought I was answering a question. But I think it was just I was looking at the price bouncing here, and I'm looking at this going, okay. 3 peaks domed house pattern. Yeah, Brian, at the beginning I talked about that. I said I find it interesting. I'll continue to monitor other people's work on that. I don't know that I agree with it entirely because this is all over the place for the floor, right? The 3 peaks on the bottom makes sense. The floor is all over the place. There are, MM Crypto, who I think wrongly claimed that this was, maybe rightly, I don't know, claimed that this was the roof and not the floor. But from what I know about the domed house, it really should have more price action. But this was pretty good price action above this general level here. So on a 4-hour, look at it on the 4-hour level. So this could have been the 3 peaks, and this could have been the floor, and this could have been the domed house, right? So we could already be there. And this also could all be the floor. I think more likely this would be the floor, and this would be the domed house if it was that pattern. But I don't know, what's your take on that? Discord link, please. Check my Twitter. So my pinned post on my Twitter feed is my Discord, is the public Discord server. DXY interest rates. Let's go take a look. Interest rates. I don't see them increasing interest rates until mid next year. But I don't know. They surprise me a lot of times. I'll tell you this. I don't have a good feel for what the Fed's going to do, honestly. Right now, anyway. Yeah, so we retook, let's talk about this, right? So we retook this, let's go to a toolbar. We retook this long-term trend line that I've had here. I'm going to zoom out some more. My chart's not fitting all this stupid price action here. There we go. 3-day. Yeah, so here's kind of the longer-term chart that I have. So we fell out of this little bit of trend line here. Now we retook it. And it's now seems to be holding above this bottom part of this trend line. Let's draw this out here. I don't know what to do with this now. Don't know what to do with that price action. Now I'm gonna have to do some work on the DXY chart. See if I can find anything interesting. I don't know. I've de-emphasized trend lines a lot more recently in favor of just horizontal levels. But for the most part, we had this W pattern, right? It's kind of almost a triple bottom through here, but not really. This is just a double bottom pattern right here, more or less. And then now, yeah, so I would say, it's definitely back in an uptrend on this kind of time frame here. It's obviously very, very sideways for its whole history, right? So since 1987, we're basically sideways on the the measured reading of the actual index. So at this stage, we're in an uptrend coming back to that midpoint. And we're kind of at a pivot right now. We're really at a pivot point right here. If you look at this, the price likes to pivot on that midline right there. So do we pivot back down, or do we continue on back up? I don't know. We're back in the middle though. We're back kind of more or less. This is median price action for the dollar. All right, so let's look at that. So just knowing that, right? Knowing our longer term, we're just very sideways. There is no super edge long term, right? In the intermediate, we've retaken this trend line. We're in an uptrend. I'm just doing some work right now trying to figure this out. I don't know what this is telling us. This is telling us that we're just right here in this decision range. I guess the market's probably waiting for the decision from the Fed as to what they're going to do. Any news about interest rate hikes or anything like that obviously will cause this to react one way or the other. All right. But I'm not, can you add Discord? So, Taz, did you find it? If you didn't find it here, let me go pull up my Twitter. I'll put this in chat for you. Here's the public Discord server if y'all want to join it. That's where I post my more regular stuff. I used to post more stuff on Twitter, and I do less live streams than I used to because I don't have any need to be going live all that often. One thing I've been disappointed to see lately is a lot of people that developed that acquired a lot of followers putting out these models that end up being totally wrong. You see them now all flipping to subscription services, trying to monetize the base of followers they had. So if the price action isn't going to play out the way they had hoped it would, get rich that way, I guess they'll just get rich off of followers paying for, I don't know, I guess newsletters or something. A little bit disappointing. All right. But will taper cause it? Taper cause what? The dollar to go up? I mean, anything that creates more relative strength in the dollar versus other fiat currencies will make it go quote unquote up, right? The DXY go up. And so the DXY, if you don't know, this is just a measure of the dollar strength versus other fiat currencies. So it doesn't measure it versus commodities or Bitcoin or anything like that. It's just a measure of the dollar's strength versus other like currencies. So right now, all this is telling me is that the dollar has gone right back to the midpoint, right? And it's just the dollar is the key, reserve asset of the world. And I think the world and those who play in this market are obviously kind of anticipating some kind of normalization of the markets, perhaps even, and we'll see. We have this kind of decision, right? If we break to the upside of this, we might have a continued move higher here. If we break back to the downside of this, we're back right in this range. So there's no intel to be gained here. The relationship of the dollar on Bitcoin is a strong dollar typically weighs on Bitcoin, and a weak dollar typically buoys Bitcoin. And that really is, when the dollar is quote unquote weak, it's not so much the absolute, it's not that the DXY is at 96 that makes it interesting. It's the trajectory. If the dollar is trending up, then that means that it's more of a risk-off sentiment in the market. People are heading to a currency that's more of a flight of safety. While the dollar is inflationary and you do lose your buying power over time, it takes time, right? So if you think the markets are going to fluctuate 50% in 1 week, the dollar isn't going to fluctuate 50% in 1 week. So that's where people go short term to figure out what they're going to do. Creates dollar strength. So that risk-off environment is what will create short-term dollar strength as people kind of flee investments and head to the dollar until they wait out the storm. And then when the dollar is weak, when the dollar is dropping, again, not so much. It's not a matter of is the dollar at 80 or is the dollar at 100. It's is the dollar dropping from 100 to 80. If the dollar is in a strong decline like that, that means that investors are buying assets and it's risk on. People are putting their capital at a risk, buying assets that could appreciate or depreciate, right, rapidly. So when the dollar is declining, Bitcoin is it's a tailwind for Bitcoin in that it's a risk on it's a risk on asset. It's currently seen as a risk on asset. Now, and it trades like that. Now, at some point, I know people are hopeful that the Bitcoin will become a hedge, a flight to safety itself, and maybe will be a risk off asset even. So that has yet to materialize. It could get there, but as of this point, it's not currently. Van by the river, grinning face with smiling eyes. All right. So even if we drop to the 30s, we ought to retrace, shouldn't we? That's when I'll exit. Steve says, yeah, good point. Even if we drop to the 30s, we should retrace. I would think so, yes. But here's the thing. Let's go look at this. And those type of retraces, like this had a pretty good retrace here, right? So when Bitcoin rolled over here, if you didn't get out in this January pop, right, and you were still thinking it was a bull market, your next opportunity to exit was this pop here to 11K, right? And that was a pretty precipitous sell-off to $5,800 and back. But this was a lot of volatility. This is after a huge move to the upside, downside, upside. The issue we have now is that this has been sideways for a long time. So 47K, we first hit that price early February. I mean, it's 10 months. It's been over 10 months that we've been this sideways. This was not that sideways for 10 months. So the truth is we shouldn't drop very far, very fast. But, a rebound back to the 50s and 60s, I think is probably likely. But I'm not certain of that, right? So I think 53 is a probable bounce level. Maybe even 60K is a potential for a dead cat bounce. But the other problem is if we roll over, quote unquote, and go down. I suppose for the first time ever in Bitcoin's history, there's a chance that we could go retest the prior all-time high. It's never happened before, right? When you take out the prior all-time high, it's never retraced that far. There's always been a gap here from the 1 level to the 618 fib level, which is right about here. So the worst case scenario should be the 618 level, but if we were to retest the 618 level again after making it all-time high, there's all bets are off in my book. Like I don't know what's going to happen after that point. But at this point, again, if you look at it just more of a broad strokes, Bitcoin is still in a long-term uptrend. Let's draw this trend line one more time here. This to me would be the main trend line, right? That trend line, you really can't lose that trend line. If you lose that trend line, that means that the thesis probably has changed around Bitcoin. Something's changed more structurally with it, fundamentally with it. But as of right now, again, as far as I'm concerned, this is a support zone that we should be looking to buy into as kind of that last area to look to buy into before we get completely neutral. But so that's my current play. All right, let's look at comments here. Yeah, well, if you're... anyway, I won't talk about that. Some coins mad 2 peaks, may post-crash, may didn't, however, like Chainlink, Litecoin, and others. Does this mean that they haven't finished their runs? It appears to me, based on more kind of fundamental analysis, looking at, who's buying and who's holding the bigger coins, Bitcoin and Ethereum mainly, and the how much is available on exchanges and so forth and so on. It appears to me that this bull run, quote unquote, is not over. But it also appears to me, based on price action not lining up with that the quote unquote bull run is also changing, right? So we're changing from a very stark bull run into a very stark bear market into more of a muted, bullish channel into maybe some consolidation, much more like the equities markets. So this is based on fundamentals, right? Bitcoin should be at like 150,000, right, or whatever. Basically, if we just extrapolated the stuff that we know about on-chain and the fundamentals that we've been watching this whole time, and you were to put a price on illiquid supply and things like that, what the upside should be, I mean, we should be at like 150,000 right now. Well, we're not. We're at 47,000. So that means that the more fundamental paradigms of what we're used to analyzing, they're changing, right? That means that long-term holders holding onto their coins doesn't create the same kind of price shock that it used to. It may it's going to put on a floor maybe more than it puts in a ceiling, right? So that's more what's happening is that these more convicted buyers are putting in price floors and helping price find a bottom and then resume off of that. But it's not necessarily creating this big, supply shock, blow off top scenario. So that's what I see. Thoughts on Michael's model? I think his timing could definitely be pretty close to so if this is kind of a three, so this would confirm the whole three peaks domed house with a domed house yet to come. Now Michael's looking for several 100,000. I've had him on a couple times. I've been vocal about disagreeing with his upside price targets, but nonetheless, the timing, he's got this springtime based on blocks peak time. If we were to do that three peak domed houses thing, we could have a pretty strong move out of here. And then, your domed house would be up here somewhere. Possible. That's like really high. I don't know if it would get that high even, but whatever. You get the idea. And then our plunge. I guess in theory, where's his timeline? Like April, May? I could see us putting in like a 108 top. I saw somebody else somewhere on Twitter post this idea that we may get this rolling top around 108. This is not unprecedented, so people even 108 sounds a bit much today because we're at 47,000. But I do want to bring to your attention the Bitcoin can make a really big move in price, even at these levels. So we went from 20,000 to 60, from 20,000 pretty much straight to 40,000, straight there, and a little pullback, and then another leg up to basically 60,000, right? So this made a leg from 30 to 60,000. This doubled, At near these price levels, we doubled in 27 days. We basically doubled price, or 20 something days, price doubled. Let's just go from the week there, 30 days. In 30 days, we put a double in on price from the end of January through the end of February. So at these levels, it can still make a big move. Let's see what it did from the July low to the September high. 80% move, and then from this low to this high, another 70% move. So putting in a very quick double even, this whole move right here from this breakout of this level, let's go from this low to that high. That was 267% in 124 days. So let me just draw them, just best case scenario, right? That puts us, that type of price action from this low right here before it broke out above this prior all-time high, this resistance. That gives us a price of 94,000 by springtime. If we have the same exact price action that we observed from 20 to 60,000, right? So I do think it's possible, but the price targets I would put on that, if we were to get like a kind of another rolling top over here, and it would definitely probably be one of these three peak looking things, in the high 90s. Yeah, I could definitely see that for sure. So I think his timing, I think it's really interesting to watch it happens at the time that he's got lined out, which is that March-April timeframe. Let me share this with you. Now remember, I've had a quote-unquote model. We've broken, my model's broken. So my model is just, I put an uptrend channel, and I anchored it at these two lows, the July low and the sell-off, and then we've had another low here that fell out of it. So technically we're out of my bull market, more or less, right? But we've broken, everybody's models are broken right now, so there's no point. I had a potential peak in here. Basically, if we would have needed to have retaken this midpoint really quickly about this point, and then a sell-off and then a resumption. But if you look at my channel, right, if we were to touch the bottom of my channel, right, the date that I have for a potential peak is March the 27th, which is basically taking, I get this from Ken Stanfield's KS model. The 2013 era peaked from halving to the peak. This is where it peaked. From halving to peak, this is where 2017 peaked, I believe. This doesn't make any sense. But anyway, nonetheless, and we take that difference. Was that the halving? This is not the halving. My halving line's way off. It's over here, March. That's why the thing looks crazy. It's right after April. Was it May 11th or something like that? Anyway, the halving was over here somewhere. All right, yeah. So you take the distance from the halving to the 2013 peak, the distance from the halving to 2017 peak, and you take that delta between those two number of days and you tack it on here. That's what Ken Stanfield basically did and said, okay, maybe we'll have a peak, that further out. If we get back to the bottom of my channel, that's in the low 90s. So that, I think, is in play. To retest the bottom of this channel as resistance and then roll over. That's definitely in play, right? So we were following this channel for a long time. And if we just take and extend that bottom trend line on the log chart, right, and retest that as resistance over here in the springtime, that'd be a $90-something thousand peak. So that's definitely in play around the time that Michael had. Now, obviously, my channel is not accurate anymore, and maybe this is more the channel now. From the all-time high launch through these, something like this. Oh, man. Another potential idea there. I haven't monkeyed with this. I just look at this the other day for just a little bit, see if I could find something. But no matter what, it's all broken. It doesn't matter. It's all very broken right now. I have to work on that some to see if I can't find something that works. But it didn't work before. It didn't work. It only worked. It worked for that last bounce that we had, and that was about it. I don't know how you count for this, keeping this in there. So I don't know. We're all the models are broken. That's all I know. But if we get if we take these 2 points in the log chart, I guess that's in play. That's my main point. The main point is if you take this point and this point, and you draw it out to the timeline that Michael has, a test of the bottom of that as resistance would put us in the 90,000 range. So I think that's in play. All right. Press the like button if you've been fooled by Moonboy's V-shaped 450K end of year face melts. Thanks. All right, I got some comments here. All right. Could you please do a quick check on the coins coming on off exchange? Yeah, I'll look at that and then we'll wrap up. Here it is right here. I had it pulled up already. We've had some coins come on exchange over the weekend. So we had a pretty precipitous decline late last week, and then over the weekend we had coins come on exchange. Another reason I'm being a little bit kind of defensive here is that we are seeing a little bit of coins come on exchange, but it's not a huge amount. So not something I'm going to get too worked up about, but let's see here, exchanges. Let's look at this chart. A little bit easier to see. All right, so you see that, yeah, we've had this pretty big decline and a little bit of a dip here. So this was a clue, like this right here. Remember, you saw this little price, this little hump that we had right here in price, and we had a big increase in coins. This was forecasting that the sell-off was going to happen as well, right? So we got that signal, the same signal we got over here when coins increase on exchange. But what happened is instead of a huge follow-through and a big sell-off, we've had, as it came back down, we've had more of a decline, and we haven't had a huge precipitous increase at any point. So that continues to give us hope that we're looking for one more leg up here. Is this we haven't seen a precipitous increase like we did over here of coins on exchange. So this will be the final. This to me is the final warning that okay, we're definitely in a prolonged accumulation phase, and we're looking at some more pain. As of right now, this is a good point. I just now thought of this. Thank you for asking the question, by the way. Thank you for having me pull this up. I did not think about this until just now, but I was thinking that we might be heading in for a multi-month long-term accumulation like this. But however, the on-chain picture is telling us that maybe a quick recovery, like over here, is more in line. Because you see that we had this kind of flat line of coins coming on exchange, and we had again, pretty precipitous decline, a few come back on exchange, but it's starting to maybe want a flat line, and maybe that's the prescription here. Is we have this, as the price dipped, we had a dip with price, and then maybe we'll get a quick recovery here. We'll see if that plays out. I'm constantly analyzing how on-chain and price action interact with each other, and I'm constantly kind of updating my thoughts and methods around this. This is a work in progress, very much so, as we kind of figure out what signal we can get out of this on-chain data. There's lots of other things, right? So long-term, short-term holders. But this is just a simple one that I show a lot. Can't see because of the comment. Oh, I'm sorry. Let's try this one more time. I'll turn the comment off now. All right. So you see here, yeah, precipitous. So we had this price right here, over here where my mouse is, on late November. We had coins. We had a little bit of a bounce in price. I think it was a bounce to like 50 something thousand. Yeah, 50s. What was the price? 57,000. And coins are coming on exchange. This kind of did forecast that we were headed for some headwinds in price. And sure enough, price sold off. Currently, though, we don't have this huge increase in price, which would lend itself to this prolonged accumulation period here. So we'll see if we get this or not. So far, we haven't got this huge increase in coins on exchange. We'll keep a close eye for that. It's kind of important to keep an eye on. What is Bitcoin doing here? Let's get rid of all these funky. All right, I'm going to wrap up here. Let's look at comments, and then we're going to wrap. Appreciate the comments. You're welcome, Tass. So yeah, get on Discord with us if you want, to be more up to speed on what I'm doing more actively. But again, everybody has to develop your own system, your own style. So if I ever put out here that, hey, this is a trade idea, it needs to be an idea that you then go run through your own analysis and your own trading system, right? It can't be Brandon's buying this thing, so I'm going to go buy it. That's never going to work ever. I don't care who you're following or who you're trying to follow. If you don't do the work yourself of understanding the investment thesis and or the trade, whatever it is, you don't have the same conviction that person does. And so you're not, when things start to, look murky, you're not going to be able to stick with it. Whereas somebody who's put in the work, has a trade idea, they set their trade, they set their stop loss, they set their take profit, and they're convicted. They've done the work, and they're going to let that thing play out, and then they're going to take profit when they should, and they're going to let it hit stop loss when it should, right? Because they've done the work, and they have a trading system that they're following. If you don't do that same thing, and you don't put a trade, okay, Brandon said, look at the Litecoin trade idea. I'm going to go work out a trade idea that works for me in my system. I'm going to buy this level, my stop loss is here, my take profit is here. If you don't map all that out, you shouldn't just buy it because I'm buying it, right? Because that's never going to work for you. It's never going to work. And then alternatively, if it's more of a fundamentals thing, you shouldn't buy Elrond because Wesley's buying Elrond, because Wesley has done a ton of research and he's got his own convictions around why he thinks it's the best. So you need to do some research, read all his paper, and have that conviction for yourself, and then you can go buy something. But those are just my closing thoughts on that. But yeah, I'm sorry if anybody ever gets wrecked trying to follow me. No, CTM model is broken. It's not broken. It evolves every day. All right, BTC is looking good on logarithmic recently. Dropped to 42K as a bounce. Pretty obvious ascending trend line. Pretty closely parallels 29 peaks marks. Yeah, I think, my moving averages are what generally keep me safe. But at some point, they also might cause me to be off, right? The market might be not responding to these like I think. I need to continue to evaluate, my usage of those. But as of this point, we're coming into the 200-day. We've closed right at the 200-day on the daily. If we close above it on the daily, all in all, this is a great spot to add. In kind of broad strokes, Bitcoin is still in an uptrend as far as I'm concerned, and it's starting to look like it's wanting to. If it goes sideways from here, then it's just sideways. It's no longer an uptrend. It's not a downtrend. It's in a very maybe short-term downtrend. But I mean, we just put in an all-time high a month ago, right? So I can't call this a downtrend, right? So it's not looking terrible, not looking great at the moment but it's coming into support. So maybe look like a great spot to buy. That's about all I can see. Fundamentals don't seem to have changed much to me since 69K. Yeah, I agree. All right. Do you know how the effect of the annual decline in balance on exchanges? I don't know what the question is. It would just be able to get a grip on how material that is versus hedge funds, short-term positions, retail momentum buying and selling. So a lot of other metrics around, long-term holders and supply ratios and things like that are derived from balances on exchange and then certain wallets. Like these data aggregators are aggregating information about large wallet holders. So are they an exchange or are they a private entity, a whale, whatever, right? And then so we do some deductions of when we see large wallets selling and small wallets buying, that might indicate that obviously retail's buying into whale selling, which a lot of times these whales are like they're selling on these big tops, but they don't. I'd say the ones that don't get the market right ever is the miners. The miners are always selling into the bottom price and holding at the top price. I don't know why they do that, but they're pretty bad. So they're like an inverse market indicator. If you see miners selling, they're probably getting close to the bottom. But yeah, I don't know what the question is otherwise. That PA is bad and coins still hodl like long term. When you have time, you should return to your altcoin fundamental tech analysis. Yeah, Sergio, I've been thinking about that a lot. I need to get back to that more. What I want to see is I want to really validate that this whole cycle, the cyclicality of Bitcoin and crypto is really indeed fading. We have not, in my book, reached a definitive, conclusive point that it is done. Right? As of right now, this could just be a very different looking quote-unquote cycle with 3 peaks, right? 3 waves, whatever you want to call it. And this is what Ken Stanfield's been saying for a long time. He expected, right? So if we put in another third really big top and then we have a big, 80% sell-off, I'm not 100% convinced that the cyclicality is completely broken at that point. It's just changing. Maybe this whole market it's obviously a lot more manipulated now. So until I get to that point, like as of right now, I know my playbook is if we get a big move in Bitcoin, right? I'm heavily invested in Bitcoin. I'll exit Bitcoin, hopefully, as a lot of indicators are lining up that we're getting close to some sort of top. I'll never get the top because I always wait for the momentum to us to prove that we're losing momentum, and that's when I sell. So I'll be 10-15% after the top is when I'll be exiting. But nonetheless, and then I'll rotate into some altcoins, and I have altcoins lined up for those trades that I think are safe this time. Really, when we enter either a prolonged sideways consolidation point, which we're getting close to confirming that, right? So say by January, if we're still in this basic range in like January or February, we can probably say that this whole dynamic around cycles is changing, and it's time for us to really start evaluating altcoins and really be focused on looking at projects with good technology and moving, more of an investor style, moving funds to places that have good, fundamentals and so forth. That'll also be the case in the bear market. So I'm planning to really return to that strongly next year as we enter the bear market, and or if it's a long-term sideways consolidation, whatever it is, and really be researching and finding the next, projects that have a lot of potential. As of right now, I'm really staying focused on the technicals and the charts because what we don't want to do is we don't want to miss out on, a lot of price action potential, and that's really why I'm still focused a lot on the charts. No problem. All right, guys, everybody, take care. I'm gonna wrap here with our Doge-wave. Doge-wave was crashing my computer again last time. Where's my Doge at? There we go. All right, guys. I will see y'all later. I got stuff to get to. It was a good chat. Thank you guys for your time. Hope y'all enjoyed it. Yeah, it's Doge-wave crashed my computer. Doesn't like me streaming and Doge-waving. All right, see ya.